everyone. This is Avijit Chatterjee recording a weekly session of Chartsarefun. This is for the week of May 18th, recording this on Sunday afternoon, May 24th. Right up front, love to share our blog site, which is in Substack, chartsarefun.substack.com. If you subscribe for this with your email, these blogs usually come out in the morning at about 7 Eastern. You'll get the blogs through your email. Our YouTube site is also Chartsarefun. We do believe that there are tremendous insights in these charts. We consider them tremendous fun to watch and spot these patterns. In technical analysis, there are these patterns that you can actually self-learn those. A lot of these are in stockcharts.com in Chart School. And the idea here is we don't provide any investment advice. We're not registered investment advisors. The goal is to share interesting and fun chart patterns that you can then use to guide your trading and investment decisions. So today we're going to talk about the 30-year Treasury yield. This is potentially set up for a very big move in terms of the 30-year Treasury yield. If you look at this, this is potentially a cup and handle. 51.52 is the left brim of the cup, came to 39.06. From there, came to the right brim of the cup at 51.53. Pull back over the next year or so to form a shallow handle towards the 45.28, and now is on the verge of a breakout, which it did. This is a weekly chart. This particular week that we just ended, it did try to break above it, 51.53. We hit 51.97, but then it fizzled out and pulled back. This key is what could do to the market if yields break out. It could, in many ways, as the yields shoot higher, it could shake up the market. So there's something definitely to watch. If you look at the measured target, if this pans out, you're talking about 39.06 to 51.53. That's roughly 12.47 is the depth of the cup. So when a cup and handle pattern breaks out, the target is you add the 12.47 to 51.53. That takes it to 64. 64 is 6.4%. So 51.52 is 5.1% of 30-year Treasury yield, came down to 3.9%, came back up to, this was in late 2023 at 5.15%, came down to 3.9%, back above to 5.15 about maybe April or so of, or May or so of 2025. Over the last year, shallow handle. The key is for this not to break out. If it does, it would send some bearish signals. A key sector that directly watches the yields, and potentially if this is a fizzle out, because as we said, 51.52, 51.53 broke out to 51.97, but closed below 51 and closed at 50.64. So that is a reversal candle, a kind of a red candle, intra-week tested that 51.97 or 5.2%, but closed below 5.1, closed near 5.06%. If we have fizzled out, and we can see in this pattern, if this had potentially had a higher high on RSI and a higher high on a MACD, that would have been a bearish in terms of bond market selling off and the yields climbing, would have been a bearish sign, and higher yields are also bearish for the stock market. That said, if this is a fizzle out and this turns out that because of oil prices perhaps coming lower from any kind of a deal we see on the geopolitical environment, maybe the pressure of higher yields from inflationary pressure is taken off, and maybe this fizzles out and we don't get that breakout. That's what the Treasury bulls would be looking for. Lower yields is good for Treasury, it's good for bond buyers, and this in some ways indicates that yields are reasonably decent. If you're talking about risk adjusted yield, this is almost zero risk on these treasuries, minimal risk. It's fetching you Treasury, investing on a on a 30-year, fetching you over 5% yield, 5.26, and this could be competing for kind of the retirement community money, people who are more safe haven buyers. Competing for capital going into the bonds versus stocks, it potentially is possible, especially looking at the risk, that minimal risk in the Treasury versus higher risks in the stock market, in particular the AI and the euphoria that we're seeing. Now, a direct beneficiary of lower yield is the housing sector. So this is the, call it kind of a market cap weighted heavily with the domestic home builders is what we're looking at. The biggest holding in this is DR Horton, then Lennar. All these are the top holdings of this ETF. It's the iShares US Home Construction ETF ITB. What do we see on the daily chart? This is classic bottoming sign. Higher lows in RSI is how positive divergence confirms a bottom. And when we saw a pullback recently last week towards just below 85 at 84.98, a lower low in price, higher low in RSI, this is a classic indication of bottom forming. So home builders ETF ITB potentially is showing a bottom on its daily chart, and MACD and RSI both with higher lows potentially indicates we could start seeing an upside reversal here. A measured upside reversal from an 85 to a 103, you're talking about roughly 18 points added to 103. 121 is where, once this breakout comes, is where this could head to if this W shape double bottom. It's kind of the right bottom is lower than the left bottom, but if this W shape works out and we start climbing up, we take out that 115, go up towards the 121 or so is potentially where this could go. If you take the weekly chart of ITB, this is classic pennant. Pennants are usually bullish signs. They continue towards the direction from where it moves. So if you look at the ITB, it had moved from a low at 48 around 2022 October or so, jumped up to 127. And since then, a pattern of lower highs, higher lows is how that pennant shape happens. We've since, this is a monthly in the month of May, we're coming towards the end of the month, but so far we've left a reversal, kind of a tail. If we can close towards the high of the candle for the month, we'll see how next week trades. ITB getting any momentum from the pullback in the 30-year Treasury and the 10-year Treasury yields could continue, get some upside. And we wouldn't be surprised over the next few months, ITB to start going to the top end of this pennant. So from the, it's closed just above 90 at 90.97, headed towards 110 or so in the next few months is quite possible. And then any reason for a big breakout would be very bullish for this sector. So we can notice from the RSI perspective, RSI has been hovering in the neutral region around 50. It is right now at 46 or so is where it is as of this month. But if this starts climbing, RSI starts climbing, MACD starts climbing again, after resetting, testing the zero line, and MACD starts climbing, we could effectively not be surprised to see a bullish breakout from this pennant shape. So looking at the chart, we're recommending that, while everyone is chasing the AI stocks and everyone's chasing this tremendous momentum out there, this sector, the ITB, the home construction sector, a lot of these are residential home construction, could potentially be a good buying point, especially as the low end of the pennant is tested and we see this beautiful positive divergence on its daily chart. Now, moving from the home builders to the NASDAQ 100 in particular, where all the attention of the investors are these days, chasing the AI euphoria. This is the volatility of the NASDAQ called VXN. And what we see here is two double tops and two double bottoms. We'll find out in the next few weeks which way it plays out. Either the double top breakdown happens, in that case, VXN will break below 21 and go towards, so from 20.9, so it's about $5 points or so, would take it towards 15, lower lows from what we saw in last part of 2025. We think, if any, this is potentially setting up for a break higher. So notice how this is a daily chart, on Friday, VXN dipped below the 200 period moving average, but managed to close above it. The 200 period moving average is at 22.58. It closed at 22.82. The low was 22.35. So it did dip below intraday, below the 200 period, but closed above it. We think this could potentially be a cup and handle, 25.81, 20.97, 25.88. That breakout above 25.88, you're measuring a little less than 5-point move, or 4.9 or so move. So that takes us easily towards 30.7 or so, retesting the levels that we saw towards that early April. And so that's potentially a VIX climb coming on the NASDAQ, which means the NASDAQ 100 ETF QQQ on an hourly chart could be breaking down from a double top pattern. The double top, as you can see, is 722 that we saw towards last week. This week, again, a 722 that happened on Friday. Negative divergence as the double top formed, lower highs in RSI, lower high in MACD. That double top on the hourly chart breakdown from a 695 to 722, we are talking about roughly 28 points or so, or 27 points actually. So subtract 27 from 695, we are talking about 668, which is, you can see here, 668, there's a gap here from May 6th or May 5th. So that gap could close as this double top breakdown, if it pans out, happens. So we wouldn't be surprised over the next few weeks for this double top breakdown to pan out and a break below 695 taking us towards the 668 to close out this gap is what we think potentially is possible. Now, a key high-flying sector for the AI euphoria is memory and storage stocks. Micron by far has been the storage stock. Huge move. It provides a lot of the DRAM memory. There's a roundhill ETF for DRAM called DRAM for the memory ETF. We can see that with all the euphoria, it printed a lower high. Yes, NASDAQ 100 retested its high at 722, but the DRAMs, like last week's high was 56, this week's high was 54.45, a lower high pattern. This is a declining channel. For it to pull back to the low end of the channel towards 45 can't be ruled out as we see QQQ pull back from its double top pattern. That's something we are watching. We would not chase these memory stocks too late in the game. They already had a parabolic euphoric move. If any, we were looking for weakness in the DRAM sector. Semiconductor ETF iShares called SOXX is printing a broadening top pattern. Yes, higher highs, but lower high in RSI, negative divergence. Higher high last week, again, NVDA had blowout earnings. Unfortunately, we'll show you the chart of NVDA. Didn't do too well after earnings. In fact, it sold off because all of that euphoria, that huge earnings beat was already priced into the stock. So there wasn't too many buyers left on the stock. The stock got hit. But as the SOXX, thanks to Micron, thanks to the other semiconductor stocks, euphoric climb, printed a higher high. So 533, it had printed twice last week, printed a higher high towards 542. That lower high in RSI indicates potentially a pullback coming, and a broadening top pullback coming. This is a megaphone pattern, would take us, as you can see, this is declining, join the lows to a lower low. So 477 measuring towards the 460 or so is where this broadening top pullback could bring it towards. In fact, the 200 period moving average on the hourly chart is 472. It could break below it. We see a gap here as well, right? We see a similar kind of gap as we saw in the QQQ chart. So that QQQ chart's gap was near 668. This chart is showing us a gap near 460 is potentially where we think this is headed. Finally, NVIDIA's earnings came out. It sold off. It had peaked already before earnings at 236 the previous week. So we can see that 18, 19, 20, this entire week, it could not test its last week's high. It already peaked last week at 236 and started printing lower highs, lower lows throughout the week. After earnings on Wednesday, we see heavy selling on Thursday and when it opened, and then throughout the last couple of days, it kept printing lower lows. However, at this point, it could get a bounce because RSI on the hourly chart is close to 30. We can see that the 216, 215, that level is key support. What was resistance from where it pulled back tended to be support here, and then it bounced. It is right there at that 215 level. We saw 215.33 is where it closed. From here, because it's a bit oversold RSI and MACD kind of pulling back, we could see a counter trend kind of a move higher. However, this, we wouldn't be surprised to see this form a head and shoulder kind of a pattern. So a right shoulder move, we can see the left shoulder from the 215 go to that 222 or 222 level or so, 222 and a half level or so from the left shoulder, from the 236, from the 215 to a 222, which is also where 222, 223 is where the declining 50 period moving averages. So a retest of the declining 50 period moving average and then a breakdown, a 215 to a 236, we're talking about a $21 height of the head. So subtract 21 from 215, we are talking about roughly at the 194 level, which is where we see right here from the early May timeframe. So that's where we think NVIDIA is headed. So if anyone looking for an opportunity to buy NVIDIA, wouldn't chase it here. That right shoulder move could be a small short move After that breakdown, a potential move towards 194 would be a much better place to consider buying NVDA. It's had tremendous earnings, 85% year-over-year revenue growth. This is absolutely outstanding. Over 80 billion of revenue was announced in the previous quarter. Next quarter, they're projecting over 90 billion of revenue and 95% year-over-year revenue growth. So momentum is there, tremendous GPU buying going on which directly benefits NVIDIA from all the AI spending. We already know that there is huge, all the hyperscalers have announced massive CapEx spending. Well, if you count together all of them, they're talking about over 700 billion of CapEx spending. A lot of that is directly benefiting NVIDIA as a result. NVIDIA and then Micron for all the memory is directly benefiting from all this CapEx spending is what's causing all this euphoric climb. With that, good luck investing. We're just going to quickly reiterate that 30-year yield was at a key point of a breakout, about 5.15. They tried to do that, hit 5.2, fizzled out, closed negative yield, as in closed minus 0.64, below the 5.1 at 5.06. If yields start declining, it directly benefits the housing sector, in particular the home construction ETF iShares. Beautiful positive divergence. Expect this to have a nice decent move. So rotation out of the aggressive, out of the explosive moves of the semiconductors into something more defensive, but something that could turn out to be a cyclical play here is the home builders benefiting from yields coming down. And the yields could come down if you see the oil prices come down. That's right now directly impacting the higher yields as the oil price is concerned. If the oil prices come down with any resolution on the geopolitical front, that could benefit the home builders. So that's what we are watching for. ITB's monthly chart shows a beautiful pennant. A breakout from this would be very bullish. And the volatility on the NASDAQ is two tops, two bottoms, that we think it can likely resolve above those two tops from 2.58 towards like 25.88 towards 30 plus of volatility of NASDAQ. So the increased volatility on NASDAQ could mean a double top breakdown on the QQQ, the NASDAQ 100 ETF. We can see a double top with negative divergence at 722. Measured target from a 695 to 722. We're roughly talking about $27 subtracted from 695 takes us to 668. This is where we see that May 4th gap is. So a gap closed there from a May 4th, a move down below its 200 period at 679 towards that 668 target from a double top cannot be ruled out. Memory stocks have already peaked the previous week at 56 is the Roundhill ETF. So from there we can see that this is declining, lower highs, lower lows. So this pullback towards 45 or so can be ruled out in the next few days, weeks. iShares Semiconductor ETF, negative divergence, broadening top pattern. The bottom end of the broadening top, which is a lower low on price, takes it towards 460, which is again where we see that the May 4th gap is. So that gap close on SOXX cannot be ruled out. A move down towards that 450 level, and NVIDIA could be an excellent buying opportunity. Right now, it could have a nice counter trend bounce towards 223, but then break down from a head and shoulder. The measured target is 194. So wait for that 194 entry on NVIDIA could be an excellent buying opportunity. With that, good luck investing. We'll talk to you next week. Thanks for listening.
We are not registered investment advisors and encourage our users to consult with their financial advisors before making investment and trading decisions. Nothing contained in our content constitutes a solicitation, recommendation, endorsement, or offer by us at Chartsarefun or any third-party service provider to buy or sell any securities or other financial instruments in this or in any other jurisdiction in which such solicitation or offer would be unlawful under the securities laws of such jurisdiction.